Good evening, everybody. Nice spring evening. All right, so we're going to be doing our top ranked signal and pattern training on Saturday. Something that you probably want to do if you really want to fine tune your analysis of what's going on in market trends. So what we're going to be looking at is, when does a pattern act as a pattern, such as a fry pan bottom? So we have expectations, which means this looks like a good bullish pattern, but where was the next target that we really needed to watch? Up here, because it's pretty obvious that if the bulls are in control and they start or see sell signals before they get to that level, that trend is over. Now it becomes a sideways trend. So here's one of the basic rules that we're going to be going through on Saturday is if you see a pattern set up. Now, I'll kind of obliterate here for a little bit that a pattern has a lot more probabilities because it is a buildup. In the case of a fry pan bottom, it's a buildup of investor sentiment in spite of what the overall market trend is doing. And then when that T-line rule, that if you see a pattern setting up, fry pan bottom T-line rule is you stay long as it stays above the T-line. As soon as it closes below the T-line, the probabilities have just dramatically gone against you. So we look at things like this, like bullfrog in the artificial intelligence area. That fry pan bottom, no matter how choppy it was over here, had one very compelling element to it. They never closed it back below the T-line. So these little tidbits are what allows an investor to not get, and I say this from the voice of experience, keeps you from getting whipsawed or having to make decisions based upon anxiety or the market trend reversal. This kind of keeps you a lot more passive as far as staying in a position that's doing a pattern and things are starting to go against you as far as the overall market, which we'll get to here in a little bit. So this is why we always stress the benefits of a pattern is that you've got a high probability of detecting which direction it's moving, number one, and the magnitude of the move is usually going to be much stronger than a mere uptrending stock in a trending market. And as we saw today, when the market was selling off, we had quite a few fry pan bottoms that were still working in the right direction. But to put the probabilities in your favor, we can be still going after the patterns like the dumpling top, which is the opposite of your fry pan bottom. And you've got that much more benefit that if the market has turned over, it's probably going to get some more oomph to the downside. So there's a lot of elements built into a candlestick chart that it gives us immediate information of what is going to be occurring. For example, when we recommended shorting KALX was based upon this bearish kicker signal. And then look what it did today. Well, there's your bearish kicker signal, obviously. No sound. All right. Then look at your bearish belt hold signal. For whatever reason, when they gapped it up and you immediately start selling off, the fact that they brought it back down here tells you the bears are definitely in control. You can stay short on a chart like this. So these are the things that we kind of point out based upon what the historic results are of candlestick signals and patterns. Chegg, big fry pan bottom. Broke out through the 50, right about where the pattern breakout. J-hook pattern, now a gap up. What did that kind of tell us? That this fry pan bottom is still working even on a day when the markets are selling off. I used your stochastic 1233 effectively for 3-week swing trading. Thanks, but now I'm doing more intraday trading. Should I change the stochastic numbers? No. If you're using 1233, use it on your daily chart, your 10-minute chart, your 3-minute chart, whatever you're using. It's got the same characteristics. All right, so why do most people not make a lot of money in trading? Because they've got those built-in fears. Boy, I don't want to chase a stock that's gapped up. But if we can recognize what type of pattern or signal it is, we know what's happening here on that best friend signal. That's why we've kind of categorized the 15, I think it's 15 or 18, somewhere in that range, of what we call the top rank signals and patterns. Because this tells us there's a dramatic change of investor sentiment. We want to take advantage of that information. What should we do after that type of move? No, if you see a close below the T line, and Kristen will I'll show you some examples of that. So this is what we're looking for, is the J hook plus. Notice how it'll pull right back. But that just gives us a high probability of where that price should move. And then we have ways to know when to get out of that trade. We'll show that too as it moved. Moderna, you can observe the obvious. A failure right at the 200. Now it's been bobbling around down here. So when do we enter that trade? That's what we're going to kind of look at. But here's the most important aspect of, or one of the most important aspects of candlesticks, is when we see that information, what is that pretty much telling us? There's a new dynamic. And what do we want to be in? We want to be in stocks where that new dynamic allows us to take advantage of that information and know what the chart is telling us, so that we're not sitting around waiting for something to happen. We're now taking advantage of stuff that is happening. So again, this is going to be stuff that when we point out what you should be doing, what is the rule for determining the projected price move with a fry pan bottom? Depth of pan? No. The length of pan? No. That has absolutely nothing to do with this move. We don't know how big this move is going to be. All we know is when they broke out of this pattern, that there's a high probability that they're taking it much higher. Oh, for crying out loud. Whoops. VR, it's not a difficult process. Once the pattern is working, you've got two rules. You stay as long as it stays above the T line, or two, if it starts moving too far away from the T line, we know that tells us to start looking for sell signals. So all these little tidbits, I mean, these aren't anything secretive. These are just common sense aspects that the Japanese rice traders have provided for us. And I always kind of illustrate the fact that I know you've probably all been promoted many times over through the years of somebody telling you the new secrets to make money in the markets, blah, blah, blah. We've never been able to promote that because there aren't any new secrets in candlestick analysis. It's just learning how to use them effectively, because if they weren't effective, we wouldn't be looking at them hundreds of years later. So join us Saturday, this coming Saturday. It's scheduled from 10 to 2, but you'll be lucky if you get out before 4 o'clock. Okay, so let's go to live charts. Here's where the analysis, if I can find the live charts. Whoops. Let me get this set up, Jim. All right. Ah, yes, there's the link Becky just put in. Okay, so we've got huge advantages of knowing what the signals are telling us. Look at what was happening up here in the overbought area in the Dow. Doji, hanging man, doji, doji, and now today it closed below the T-line. Now, was that relevant? Pretty much, based on, you could draw a line right through the tops of the market. And that's for the people that are watching support and resistance. We can see obviously what was happening at the resistance level, lots of indecision. Kind of the same scenario on the NASDAQ, where right about, this level, you could see they were starting to sell it off. So even though yesterday they opened it lower and brought it back up, they were still above the T-line. But remember, one of the aspects that we have of knowing what investor sentiment does. Let me make this big enough where we can see it. Look what happened. They opened it here and closed it here. And today, the sellers had enough strength to gap it down below the previous day's open. And even though they tried to take it back up, they closed down here. What's that telling us? That selling force, or that change of investor sentiment, has given us an extremely high probability that now they're selling it off. They resisted up here. So that's not that difficult to analyze. You don't have to be a sophisticated technical analyst to understand what the signals are telling you, or the patterns are telling you. Where was I going then from here? Let's see. That crude oil. Crude oil had been holding up above 80, or in the 80 range, is now trading lower. So that gives us a good indication that probably the oil stocks are starting to trade lower. So again, that's not a difficult assumption to make, that if crude oil is starting to sell off, more than likely oil stocks. So it kind of puts everything in alignment, kind of that 2+2 alignment. All right, so some of the stocks that we're participating in right now, we still use the T-line. So on LLAP, we can see what's happening here. You've got pretty much a T-line crunch, and notice where it closed. Just slightly positive. They couldn't take it down below or close it below the T-line. So what would be a good entry? Well, if this opens positive, what's it telling us? A T-line crunch is working, but what do we expect everybody else to be seeing? There's probably tons of people out there waiting to see if they can get up through the 50-day moving average. If they do, they'll start piling in. If you're not long this and you see it open positive, that means you can move aggressively, because more than likely that's what it's going to be telling you, that everybody else is starting to come into it. Now, we also went after the some of the banks, because you could see kind of the bullish after this big consolidation. Your best friend signal, it didn't confirm today. Charts disappeared. Did it do that for everybody? All right. So if your charts disappeared, you may have to go up to that red X, click on it, log off, and log right back on and see if that connects you up. All right, so this is where you put 2 plus 2 together. If you can recognize the pattern, like a fry pan bottom, and you can recognize the short-term pattern, your J-hook pattern, this means if this opens positive and you still have not bought it, at least now you've got multiple reasons for buying. One, because it's doing a J-hook. Two, it's confirming your fry pan bottom. Three, breaking out into this area. It just puts a lot more probabilities in your favor. So we were also watching BBIO, because you can see what the resistance level is right about in here. You can see what the support level is right here. So essentially what you have, a wedge formation. So if this had opened positive, let's get rid of that little. This had opened positive and started trading positive, it's telling us we're breaking out through the top of this wedge. Bill, that's right too, that if you've come in, you want to make sure at the very top of your page you're not on slides, that you're on screen sharing. All right, so when would we be buying this? Well, you've had your best friend type signal, that if it starts breaking out through this level, essentially you can conclude that wave 3 is in progress. We did ATLX because it was doing that kind of same scenario. Look at your little wedge formation. Now it's broken out, and you can see that slow curve. Here's one of the what we call top rank signals and patterns. When you see that little trajectory, now it's not big enough to be considered a fry pan bottom. Usually a fry pan bottom is going to be down here in the oversold area. This is what we call a slow curve. It's kind of that little quick buildup of investor sentiment. And when they break out, the results are a good strong price move. So why does that happen? Have no idea. But when you can see that slow curve breaking out through a resistance level, that means there's a dramatic new strength of price coming in. So it's broken out through the wedge off a slow curve. You just stay long until you see a sell signal. So anytime we can see a pattern setup, there's your best friend signal. There's your J-hook pattern. Now, if you were buying in here or here, when would you sell? When it closes back below the T-line. If you didn't buy here, here, or here, what's this telling you? We've already seen that there's a brand new excessive bullish sentiment coming into this price move, this becomes a much more opportune time to say, well, I didn't get it here, but I wouldn't buy it here, I wouldn't buy it here, but now I'm starting to buy it here because I can see what pattern is setting up. And so that lack of anxiety is based on how long do you hold this until you see a sell signal. Now you might see if it opened lower tomorrow, there's probably some profit taking coming back to the T line. You can either take profits or you wait to see what happens at the T line. So all of this information that is built into the chart is just telling us what are the prospects. I don't know why Toro does this, but you can see we're in a good strong uptrend, and I don't know why that is. That sometimes this chart service doesn't have all the information. This is not a difficult chart analysis. Just like any other indicator. Now we know when they pull back to the T-line, it acts like a natural support and resistance level. The reason it's not ultra compelling is because, I say ultra compelling, that it essentially you need more confirmation is, or I shouldn't, I'm saying this the wrong way. The reason this works for us is we can see that it works off the T-line, which nobody has on their charts. The reason it works off of here is because everybody has a 50-day moving average on their chart. So this becomes a very high probability trade setup. It's breaking this downtrend. They came up. I don't know how much they came up. Came up wave one, wave two, right back to the 50. Now this becomes, and notice what they did here. This is your bullish flutter kicker signal. I thought it was older than that. Let's see. I'm going to take a quick gander here and say, oops, all right, so it was right here. All right, so there's two elements to knowing what the probabilities are of a trend move. First of all, our top rank signals patterns give us the opportunity to witness which moves are going to be ultra strong, like your trend kicker signal. Not your trend kicker signal, your bullish flutter kicker signal. But the fact that they did it right off of this level adds to the probabilities that wave 3 is now in progress. Now, even if you might look at a chart that would be not real exciting, and I'm trying to think of one, and they're usually the biggies, the institutional traders. Oh, let's say, for example, Microsoft has a good chart, but it's not a big magnitude movement. However, if the probability movement is pretty strong, that's where you can go and use strategies that will take advantage of the direction of the price move, even though the magnitude isn't all that great. Which means you could put on a bullish spread, something to take advantage of that price move. All right. Is there a reason why you're using? No, this is just a 15-minute delayed. It has nothing to do with the timing. I pay $1,400 a month for this service, and it would be even more expensive if I was using live. So it's delayed on the stocks by 15 minutes during the day. The real time. So I use this because it's got good good graphics and I can move fast. But I'm usually using things like this as as my live trading. That could be setting up for a dumpling top, yes. Okay, now I'm getting way behind here. So you can stay long on a fry pan bottom as long as it doesn't close below the T-line. Wrong way. So as you can see, this fry pan bottom still has not closed below the T-line. Same thing with apps. That fry pan bottom still has not closed below the T-line. Now, it did a doji right here at the T-line, which makes our trading scenario very simple. Look at the little wedge setting up. And a doji. Now, it's not unusual to see a doji at the end of indecisive trading because what's a doji? That's your ultimate indecisive trading. Now we have the doji rule, which says it's going to move in the direction of how they open after a doji. So if this opened lower tomorrow, we'd close this out because that means the T-line rule has now been breached. They're probably coming back to test the 50, close out the trade. All right, and let's see. So things like ENPH. Notice that it opened lower today, but then came back up. So not only did it stay above the T-line, but it stayed well above our, came back up above the 3T line. So why is this a good strong chart? Because you've got kind of a bobble breakout with a doji sandwich, stochastic still heading up, so you can pretty much stay long. Now, if you're long, here's where the common sense stop loss aspects of candlesticks work very effectively. If I was long, I'd essentially put a stop right there, because logic says if this is rolling over and then you're still selling it off, I want to close it out. That means they're not buying it anymore. Domo, kind of the same scenario. Look at your J-hook plus. Where is the anticipated target? Up here at the 200. But we got doji doji. If this opens lower, what are they telling us? Kind of failing right in here, coming back to test the T-line. Close it out and wait for the next buy signal. That was Domo. Kayla. Here is a very strong signal. But when it closed back below, back here, what did it tell us? Told us they were closing back below the T-line, about the halfway point of this candle. What's that telling us about our uptrend? It's not there. Wallace, this charting service is CQG, but this is the grandfather of all charting services, and a lot of the charting services that you use or other ones use this as a as their feed. But I pay about $1,400 a month. You're going to get the same charts on CQG, not CQG, on TC2000 or Metastock, and probably the feed for Thinkorswim and some of those are also coming from this charting service. So this is why the T-line rule works very effectively. There's your best friend. Now look what we're starting to see, and when would you close this out? When it closed back below the T-line. That's on Y NAB. ITSY. There's your J-hook pattern. Now you're right at the T-line. So now your T-line rule becomes in effect. If this opens lower, you close it out. It needs to open positive and trade positive to keep that 45 degree in progress. So is Magic? Yeah, Magic's in here. So we got a couple of the Magic kicker signals. Oh, this one just doesn't come up over here. ROIV is still working as a kicker signal. And Morph is still working. However, notice where this opened and closed today. Pretty much near the lower end of the previous day. So now at least we have a game plan. If this opens lower tomorrow, we close out the position. It needs to open positive and trade positive to keep that 45 degree in effect. So the time to get out of positions is just as important as when to get into a position. Weatherford had a nice bobble breakout, then a bearish engulfing. Doji, today it gapped down. Probably needed to close this one out because even though this was a good buying area because of the bobble breakout, it didn't work or it didn't work effectively. So a major aspect of successful investing is getting into positions that look like they're working, but knowing when they're not working so you can get back out and move that money back to a success. Good, effective bobble breakout, fry pan bottom, dark cloud, bearish engulfing, shooting star. It's telling us we're starting to see sell signals up here in the overbought area. You don't always have to wait for things to close back below the T-line. You might start taking things off the table, and then you have a new game plan. You wait for the next buy signal that brings prices back up through this level. Let's see, we did Rivian. You can see wave 1, wave 2, wave 3. Wave 1, wave 2. Notice what happens up here in the overbought area. Your doji, and then your close below the T-line. What can we start anticipating? Well, we're already in a downtrend. Now we might be heading for a bearish J-hook, dumpling top. This gives you that much more insight as far as the strength of the buyers and the sellers, which direction it's likely to go. So even if this one hasn't been shorted yet, look where it traded today, back below the last support level. And now, if this opens lower tomorrow, what do we got going for us? Got kind of the doji rule, number 1, and number 2, a bearish doji sandwich implies this is now in wave 3 to the downside. So another example of knowing that the market is not showing a lot of resiliency is when you look at the biggies like Google. That's an ugly chart up here. You couldn't tell which way it was going. So if you start looking at a lot of these charts and you can't tell which way they're trying to go, Amazon backed off at the end of the day. That doesn't look like a real resilient chart. Apple, same thing. Whoops, let's make this bigger. Look how it opened lower and continued to trade near the lower end of the previous day's trading. That's kind of telling us the wind may have come out of the sails here a little bit. Let's see. Netflix. So these are all kind of telling us, these aren't really great charts to either be long or short. NVIDIA, that's just an ugly chart. Now, the reason I'm showing you the ugly charts is if you can look at the biggies, Apple, Amazon, Tesla. Tesla got whacked today. Kind of your dumpling top. That there's not a lot of bullish resolve in this market at this point. That's another, well, you don't really need to say that's a left-right combo. No, because your stochastics are still heading down. That's probably just an up day and a downtrend. So I wouldn't categorize that. Remember where your left-right combo is going to work most effectively when your stochastics are down here. So here's your 2+2 analysis. And this is the type of thing that keeps you in strong trades because of the pattern. Look at Legend. This is another magic discovery yesterday. Look at your trend kicker signal. And where did your trend kicker signal occur? Breaking out through that level. So here's your 2+2 analysis. If you can see your fry pan bottom, what do we expect coming out of a fry pan bottom? Strong price move. What creates a strong price move? Well, a big, huge move. In this case, a trend kicker signal. So what did this tell us? There's probably going to be a lot more upside from that fry pan bottom. So this is basically just identifying where your high probability, high profit trade setups are going to be. Would I be buying stock here or calls? Maybe not. Maybe I'll do a 65-70 spread or a 67-50, 72-50 spread with the anticipation that if this moves, that low spread price now turns into big profits. Look at your J-hook plus on Abbott Labs. And what's the difference between a J-hook and a J-hook plus? A J-hook plus, you can see exactly where the buying started that everybody else is watching. And then you could see where the bobble breakout was. These are the type of pattern setups that at least put the probabilities in our favor. So what does the classic pattern look like? Big fry pan bottom, breakout, and then what happens? They usually pull back, and we can see exactly where they've pulled back to. Right smack dab to the T-line and starting back up. So now we have a high probability that this is going to be moving higher. Now, there must have been some news on the artificial intelligence area today because they were trading positive, and then late in the day, they all started selling off. So this one has been one that we've been waiting for it to base and come back up. But as you can see, something hit it today. This is why waiting for a close above the T-line is very relevant. And setting stops at the appropriate times is also very relevant. So if you have a big price move and a doji in the overbought area, logic says just put a safety stop below the low, because what other factor are we looking at? Look how far away you are from the T-line. So all these visual aspects give us that much better probabilities of knowing when to get in and when to get out of a trade or stop out of a trade. Whoops, did that backwards. T-N-Y-A. Observe the obvious. Where was the breakout of this fry pan bottom? At a level that everybody else was watching, or at a level that the fry pan bottom started. What does this information tell us? They're finally coming in with great enthusiasm. Let's see. This is your quintessential trading analysis. Rounding bottom, gap up best friend, a stick sandwich. Now, a stick sandwich is out of the 50 or 60 candlestick signals. We've got the 12 major signals that are going to occur quite a bit, but that doesn't mean you want to disregard the others. And I always, myself, go back through one of my books and just scan through the different signals that you don't see very often, but it just keeps it fresh in your mind that this right here is a signal. And that's called the stick sandwich, which implies the bulls are still in control. Now, what do we know about this type of move? We stay long until we see a sell signal and a close below the T line. Again, this takes the emotional guesswork out of your trading. Dollar General. There's your bobble breakout and a doji. So what's our doji rule tell us? If they open this positive and start trading positive, you can be buying immediately because what's everybody else watching? They're watching to see what's happening here at the 50. What we want to see is if it opens positive, the doji rule, that's confirming our bobble breakout J-hook pattern. And on the sell side, whoops, let me take a look at one more here. There's your J-hook pattern. There's your best friend. There's that strong move. There's your pullback. Where could you be buying this one? If it comes back up through this level, what's it telling you? Your J-hook pattern, wave 1, wave 3 is now in progress. Now, would you have been buying this one today? Yes, if it had opened positive. The fact that it opened lower is an indication that the bulls weren't there yet, so you didn't buy it yet. So you don't take it off your watch list. You still watch to see if the bullish sentiment steps back in. ASML, kind of a dumpling top. It didn't execute today, but where would you short this one if it comes back down through today's open? And Vail. This again is observe the obvious. The 50 is acting as resistance. Now they've taken it down. Notice how yesterday they gapped it down and showed that the 200 might not be acting as support. This one you can still be shorting because where do you think the next viable target might be? Down here. So that still is a good short, just based upon the force of that selling. Let's see, whose handwriting is this? Observe the obvious. Look at your bearish best friend, evening star signal, failure at the 200 and the 50, gapping down through the T line, failing right here again. Once again, if this opens lower tomorrow, what do you have going on? There's your bearish doji sandwich, which means this candle right here should be the same magnitude as this candle, which also tells us that this support area is not acting as support. So will that happen? Let's just say if you see that happen, the probabilities are pretty strong, but that force right now is telling you the sellers are in control. Mr. M, hold on to your individual requests until I get done, and then when we're done with all the questions, I'll tell Jim to do the double line. So this is what you look for when you see that bearish best friend, opposite of the bullish best friend, a lot of force to the downside. That's Cisco. HLIT, there's your bearish doji sandwich. So here's a perfect case of, if you see this setup, overbought condition, a doji, if they start trading it lower, what type of signal and pattern do we have? A bearish doji sandwich. And if we have a bearish doji sandwich, especially if they gap it down, what's that telling you about the T-line? T-line not acting as support. Now you're looking for the next support level. UNH, there's your bearish kind of bearish double doji sandwich. Now you're sitting right here. Stochastic's heading down. What's your next strategy here? Well, may not have shorted it today. However, if they open this lower, doing a bearish doji sandwich again, what's it telling you about the 50 support level? It's not acting as support. They're going to the next level. And that would be further confirmed if we wake up tomorrow and see that the pre-market futures are opening the markets lower, that we're still heading in a downward direction, which should be the assumption. I'll say this, the assumption. Yeah, a little bit of diciness on the aftermarket futures. ELV, your bearish best friend. You're sitting here at the support level. If this opens lower, bearish doji sandwich. And Philip Morris. Big gap down. If this opens lower, what's it telling you? It's confirming the doji rule, and if the 50 or the 200 is not acting as support, where's your first likely target? Fill in the gap, telling you you're heading in a downward direction. Where's your next likely target? Fill in the gap down here. Now, a lot of people say, well, once you see something like this, will it fill the gap? It will, maybe, eventually, but we're not worried about it right here because this is telling us we're in this trend. And then we're out. If we're out of this one, well, maybe the next trend is coming back to fill the gap. So we're looking for patterns. There's our J-hook plus. Again, a J-hook is when you see that type of movement getting ready for wave 3. A J-hook plus is where you get added confirmation that a support level is acting as support, making that J-hook pattern that much more identifiable. And the bobble breakout was when they came up to that level, pulled back, and then went through it. That's your bobble breakout. Now, the reason the J-hook plus and the bobble breakout are so much more effective is because they're using moving averages that everybody else is watching and making their decisions. So anytime we're trading something, we're not trading it because it's in an uptrend. We're looking for the ones that have the strong price moves so that we're going to get a much more defined analysis of the direction of the trade, number one, and then the magnitude of the trade is going to be much stronger than just a mere uptrending stock. Would you please once again tell me the moving averages? Yes. The moving averages are the 50 is the blue. The red is the 200-day moving average. Now, these two moving averages are on our charts because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We don't use them to make our decisions. We use them to see what kind of candlestick signals and patterns are forming right at those levels. So these are both simple moving averages. Now I also have the T-line. The T-line is the 8 exponential moving average. And the most powerful statement about candlestick analysis is that if the candlestick signals are the graphic depiction of everybody buying and selling, or a graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine the two, you've got a very strong trend indication combination. No, these are the moving averages. That's the 200-day simple moving average. The blue is the 50-day simple moving average. The T-line is your 8 exponential. And then you can see the little green line. This is the 3T line, the 3 exponential. Works in combination with the T-line. You also have, oops, I don't have them over on this chart. I also, on the other chart, have the 34 EMA, which works reasonably well. And this is the nice thing about candlestick analysis, is no matter what you put on your chart, it should be helping as a confirming indicator, because the most important factors on any chart are the signals themselves. I'm trying to figure out which ones. No. This is the most important factor of a reversal. Look at your morning star signal, best friend gap up near the oversold area. Look at your bearish kicker signal in the overbought. Now, kicker signal doesn't have to be overbought or oversold. The kicker signal is so strong that no matter where you see it in a trend, it's going to cause a reversal. It's even that much more potent when it's in the overbought or oversold area. Okay, any other general questions on candlestick analysis? Yeah, so Becky's put the link in again for Saturday. Saturday is one of those where you don't have to take heavy notes. You just kind of sit back and say, all right, the best trend signal is the top ranked signal. Why? Or we put it as number 1. Why? Because not only does it occur with a high probability of a reversal and a strong price move, but it occurs quite frequently. And we go all the way down to, I can't remember which one this might be, a McMuffin, or but all of them are extremely good. So, and then the other side of that is, a lot of people say, well, shoot, I can't remember all 15 of these. You don't have to. As you're sitting there, you pick out maybe 3 or 4 that you identify and can see pretty clearly. And you become an expert at those. And I can pretty much guarantee you that if you only pick out 4 candlestick reversal signals, you'll still have more trades than you'll be able to handle, because the major signals and patterns work all the time. Yes, that does look like a scoop type pattern on DRMA, because your flat handle, and then notice what's happened over here. Look at you. Remember common sense that if a doji represents indecision, a series of dojis represents more indecision, and this tells you exactly what their decision was coming out of that side. Is this IBM? The message have a high probability rate like the inverted hammer? That's not a message. That is a bearish belt hold. Now remember, a message is something that gaps up and then maybe close here. So it's still gapped up and there was profit taking. That is a bearish belt hold, which kind of implies there's more downside. Same thing as what we saw over here on CALX. That implies there's a lot more selling. Avocado, that is pretty much a nothing chart. No, not even dumping top. That's just a sideways nothing. So this is also an element of candlestick signals is if you can't see the direction or there is no direction, move on to something else. Always spout out the statistic or the number. There's 9,500 trading entities out there. If you've got one that doesn't really look like it's going anywhere, go on to something else. Maybe in a week, 2 weeks, 5 weeks, now something might be shaping up on that one. Let's see. Oh, was this one? So the idea was that if this opens lower, notice it's already had a big price move. The price move might logically come down here. You might not necessarily want to be buying puts on this, but maybe you want to buy a put spread. In looking at some charts, there doesn't seem to be a candlestick signal in oversold condition to draw one's attention. Is there an explanation? Example, is that Amazon or Amazon that you're referring to in late March? Yeah, there wasn't really anything great in here other than you did have a little gap up. Whoops. So what was the overall trend of this Amazon? Is that the one you're asking about? I don't think there's an Amazon. No. Yeah, so is this a real exciting chart? Not really. So if it's not anything that you really can hang your hat on, again, go back to the 9,500 trading entities. On any given day with very simple scans, you're going to find 3, 5, 10, 15, 20 good charts. Then it's just a process of going back through and say, all right, out of those 15 good charts, which ones are the best ones? Yes, VR, if you can't make the trading, or even if you can't sit there all day, it is recorded. So the disadvantage is if you saw something and you had a question, if you're there, you can ask that question immediately. However, that's not a deterrent that if you're looking at it later, you say, oh, I got a question on this, you always can ask it in the chat rooms or email me and say, on such and such a chart on such and such a date, I see this. Can you explain that better? Legend, whoops. If Legend opens up tomorrow, is this a doji sandwich or something else? You wouldn't really consider it a doji sandwich. You would just consider it the kind of the continuation of that price move. So I mean, if it gapped up headed positive, yes, you'd consider that a doji sandwich, but it would be more confirmation of your fry pan bottom breakout. Which signal can be used at the open and which signal must be used at the close? Can a doji signal be used at the open? A doji can be used at the open if it occurred previously. Because obviously out in the open, you don't know whether it's going to finish up as a doji. So there's a lot of times that I'm trying to find one where you might see a doji after a big bullish candle and it closes right on the 50. Well, obviously, if it opens positive the next day, you can buy immediately because of the doji rule, one. And two, it's telling you the 50 is not acting as resistance anymore. So that's another thing we're going to be teaching on Saturday is the, which one was it? Which one was it? Let's see if I can remember. I can't. I was trying to figure out one that you had the bullish flutter kicker. That if you see a doji gap up above the previous day's open and finishes as a doji, well, we know that if it opens positive after that, it's going to trade positive, which gives you that bullish flutter kicker. A belt hold signal is when they gap it way out of the trading range and bring it back into the trading range. Can be usually either a bullish or a bearish, or let's say down here they gapped it way down and brought it back up. That would be a belt hold. The Japanese race traders explain it as the two wrestlers. One's trying to back out of the ring, the other one grabs his belt and pulls him back into the ring, so that fight is still continuing. You wouldn't consider this so much a dumpling top, but you can see the nature of the curvature that was they're selling it off, and when you see this, obviously that's a deterioration of investor sentiment. That's where you can expect some more strong downside. Well, there, yes, so will be a double line here in a second. Say I scrolled too fast. All right, so Crocs. Crocs we recommended the other day because of this smaller. You could see kind of the fry pan bottom. You could see the J hook plus, then followed kind of a breakout through this level. So when you have this fry pan bottom breakout with a J hook plus, the probabilities are that it's pretty strong. That's where you want to be buying. Now the difference between a candlestick signal and a candlestick pattern is you want to buy the signals when your stochastics are in the oversold area. You want to buy the patterns when you're usually up in here in the overbought area. Let's see, didn't we answer if Legend opens up positive tomorrow, what did I just do? Did I type it wrong? L-E-G-N. You wouldn't consider it so much a doji sandwich as the continuation of this fry pan bottom breakout. You can scan for kicker signals on and thinkorswim. That's, Mike, where you would ask Magic how he does that. He's now good at scanning for kicker signals. Cynthia, right now you just stay long as that 45 degree doesn't close below the T-line. All right, if I've skipped some of yours, First Solar, that's a nothing chart. It had prospects of breaking out through this level. That's why you wait for it to break out through that level. Until it does, you're still in a sideways mode, which means I'd be someplace else. Explain once more where the buy patterns or signals. Explain once more where to buy patterns. That's the whole point of all this, Lou, is identifying the patterns. And you want to be buying patterns at the breakout levels. There you go. Make sure it's kicker signal or you'd get all sorts of interpretations of that. Yes. Legend would be the continuation of what is already considered a, whoa, how come I keep doing that? This is our expectation of what to expect coming out of a fry pan bottom. Is a strong price move. The trend kicker signal illustrated that strong price move. So anticipate more upside. Okay. If you've already put in a symbol, be ready to put it right back in. Jim, let's go ahead and do the double line. Now you can put in your signals or symbols. And Jim, in 3.2 seconds, let's put in the next double line. So yes, your cues, if this opens lower tomorrow, the doji rule says we're heading lower. Iridium, big breakout, best friend. Now you watch to see how they open this. So this is the type of thing that we kind of instruct OIM on our Saturdays. If we've got a best friend signal, what should we expect? More positive trading. If it opens here and starts trading down, you close it out and you don't pay attention until it comes back up through that level. Olo, get ready to short this. Your bearish kicker signal. Now you have kind of that doji sandwich. If it opens lower with that type of move still, because that's showing you a lot of force to the downside, they're going to break this level. Edit. Oh, you can see where it failed at the 50. If you've held on to it, it has to open positive and trade positive. If it opens lower, you're still in a downtrend. PACB, that's a nothing chart. It wouldn't be long or short. That's absolutely sideways. Iridium, no. A cradle usually will occur at the bottom of a trend. That's just sideways. And VRO, that's a perfect example that when you're in the overbought area, just as a safety stop, come back down through that level. At this point, you could go short. Let's make this chart smaller. It wouldn't be your best short, but more than likely it must have been earnings. You could short this one on weakness. TMDX, that one you can get ready to buy. You've broken this downtrend. You've got kind of a double doji sandwich, scoop type pattern. You can buy this one on strength. There's your bullish engulfing confirming. You could still buy this one on strength. Observe the obvious. Took it up and then drifted right back down to the 50. Now they're coming back up. So if this opens positive, breaking this level, you stay long, just don't let it close back below the T-line. Dollar General, get ready for positive trading, giving you a bobble breakout confirmation. Broadcom, nothing. I probably wouldn't pay attention to this until they can come back up through this level or kind of breaking that little downtrend. Tech, that's drifting back. So here was your warning to take profits. Where do most people buy? They buy exuberantly at the top. So that gap up told us start watching for profit taking. Well, look what happened the next day. There was your bearish harami telling you the buying had stopped. You'd start taking some profits and definitely would not want to see it close back or trade back below the low of the doji, because what would that tell you? At least they're coming back to test the T-line. Big breakout on this one. Kind of your fry pan bottom. There's your morning star type signal. Watch for a 45-degree off of here. BXRX. Oh, what happened here? BXRX. That's a good little fry pan bottom breakout. Notice that once they broke out, what they did today. Oh, they didn't. But they came right back to test the 50. You could be buying that one. Just make sure you got good volume on that price stock. And ATAI. Just stay long. There's your fry pan bottom. There's your J hook. Simple. Just stay long as it stays above the T line. Wish. Nothing. If you're short, you can stay short. KRE, that's pretty much a nothing chart right now. That's the regional banks. But you get ready to buy if it comes back up through that level. So a lot of the banks that looked good yesterday kind of fizzled today, but you still have your best friend signal breaking out of a congestion area. You can still be a buyer of this one, especially if it comes back up through today's open. AMGN, stay short. Look at your big bearish left-right combo. And then where was it coming back to? The T-line. If it didn't hold the T-line, where's that moving to? Next target. Stay short. What the heck? Oh, for crying out loud. Kind of a nothing chart on this one, Bruce. If you're thinking of going short, use today's open. If this was not a reversal signal, it's just showing a bounce off the 50, but if it comes back down through today's open, you can short this one. Zeus, stay short. There's your little bearish J-hook pattern setup. Are these left-right combos? Let's see. Not really. You're not in the oversold area. They may just be bounces. So they wouldn't be anything I would buy unless it came back up through the T line. Remember, your left-right combo should be in areas where it's logical to see a reversal, meaning the oversold area. Flow, did I do the right one? 2 days ago. Oh, bearish left-right combo. Yeah, it just makes this a nothing chart until you get more confirmation. Another one where you could short if it came back down through today's open. And Guild, well, it wouldn't be considered a left-right combo. It's just, again, just positive trading in an uptrend. But very good J-hook plus. Look at your bullish engulfing. I'd be a buyer of this one on strength. That one's not coming up. CLRX. Wing, slow uptrend. Want to see it get up through this level. And you don't want to see it close back below the T-line. That one is a bearish flutter kicker signal. That one you can short. And this is why a bearish flutter kicker signal is so easy to identify. You had an uptrend. The next day they gapped down below the previous day's open and did a doji, which told us that if this opened lower, we would be shorting immediately because there's your bearish flutter kicker signal. That was your alert. NVIDIA is kind of a nothing chart. I would not be long or short. There's no direction to it. CrowdStrike. What the heck? What I'm doing here. CrowdStrike. Stay short. Bearish left-right combo at the resistance level, back below the T-line. Suspect coming back to the 50. DR Horton, fry pan bottom breakout. Look for more upside on positive trading. Las Vegas Sands. Best friend breakout. Slow curve, fry pan bottom. Look for a 45 degree. So it opened at 62.14, closed at 61.53. Now that is your message. So if you're thinking of buying, you don't buy it until you see a buy signal. Walmart. You can buy this one again. There's your classic pattern, fry pan bottom, J-hook. You could buy it, just don't anticipate making a lot of percentage movement on this other than if you do a kind of a spread transaction. Still ready to buy CXAI on positive trading because that would be your J-hook pattern setup. AI got whacked, so you shouldn't be in this one ever since it came back down through the T-line. You shouldn't buy it until they close above the T-line. And GFAI, get ready to buy this one on positive trading. You're bullish engulfing right on the T-line. THCH, stay short if you can short this one. Some brokerage firms don't let you short stocks, but you definitely would not be long on this one. Pulte, just stay long. Nice steady uptrend. Wynn Resorts had a little bit of strength today, probably off of Las Vegas Sands. So if you're thinking about buying this one, you can see how it opened below where it, or closed below where it opened. I'd be more apt to be a buyer if it came up through this level. And NTAP, stay short. Evening star signal, gap down. I would suspect at least coming down to test this area. Amazon is kind of a nothing chart. Just not really going anywhere. MATX. Big breakout. Look for a 45 degree. How much volume do you need for stock trading in the Jay, I usually want to see at least probably 1 million shares. And again, it's all based on the size that you're trading. The lower the volume, obviously, the harder it is to get in and out, and the slower for a pattern to develop. So if I'm looking at stocks in the $2 or $3 range, I like to see them 800,000, 1 million, 1.2 million minimum. Steven. CLX, Clorox. All you can do here is stay long as it stays above the T-line. Starting to see a little bit of exuberance, but nothing dramatic. And Bank of America, that's a worthless chart because it doesn't have a big magnitude move. I'd be someplace else. Meritage, stay long. A little indecisive up here. Just use the T-line as your stop. Okay. Make sure you join us on Saturday because in 6 hours you're going to get a lot of insights as to what makes a very strong price move. Little surprised you don't have volume on your charts. I do on the other charts. I could put them on here. But usually the universe we're looking at has already surpassed our expectations are that we want to have more than 200,000 shares traded each day. Can we 6 hours Saturday call? Can we 6 hours Saturday call? Ziva, I don't know what that is. Can we 6 hours Saturday call? Explain that a little bit better, please. So you can see that ENPH opened lower but came right back up. So it's still in a bullish trend. I meant is it 6 hours Saturday call? It's scheduled to start at 10 on Eastern time, and it's advertised to go to 2 o'clock. However, there's no way we ever get done at 2 o'clock. So it usually goes to 3, 4, sometimes 5 o'clock, depending on how many questions there are. So is that what you're asking? Okay. All right, everybody. Enjoy the spring weather. We'll see everybody bright and early tomorrow morning in the chat rooms. We'll see you then.